Upstart. It's a name that buzzes with the promise of disruption. A company that aims to redefine the financial landscape, a new way of doing things, a fresh perspective on an age-old industry. They're shaking up the dusty old world of lending with the power of artificial intelligence. It's a seductive story, one that promises efficiency and fairness. Wall Street loves a good story, especially one that promises high returns and innovation. And for a while, the story was enough. Upstart stock soared. Investors couldn't get enough. The excitement was palpable. The idea is simple, almost too simple. Use AI to better assess credit risk. Use AI to better assess credit risk. Look beyond the traditional credit score. Look beyond the traditional credit score. Upstart claims its algorithms can identify credit-worthy borrowers that banks miss. Upstart claims its algorithms can identify credit-worthy borrowers that banks miss. More loans, lower defaults, everyone wins. Right? Maybe, but maybe not. More loans, lower defaults, everyone wins, right? Maybe, but maybe not. There's a reason lending has always been a human game. There's a reason lending has always been a human game. It's about gut feeling, about understanding the nuances that numbers can't capture, about understanding the nuances that numbers can't capture, and about knowing that even the best models can be wrong, and about knowing that even the best models can be wrong. Upstart is betting big on AI. Upstart is betting big on AI. But is it a bet investors should make? The future of lending might depend on it, but is it a bet investors should make? The future of lending might depend on it. Only time will tell if Upstart's AI-driven approach will truly revolutionize the industry, or if it will be another cautionary tale in the world of finance. Upstart's algorithms are impressive. They are designed to analyze vast amounts of financial data, identifying trends and patterns that might elude even the most experienced human analysts. These algorithms crunch massive amounts of data, processing information from countless sources in real time. They find patterns humans miss, uncovering insights that can drive smarter financial decisions. But there's a catch. Algorithms are only as good as the data they're trained on. If the data is flawed or biased, the results will be too. And the data tells a story that reflects the economic conditions of the recent past. The story of the recent past is one of stability and growth, but also of historically low interest rates. Upstart's model was built during a period of historically low interest rates. Borrowing was cheap, defaults were rare. The economic environment was favorable. The economy was humming along, with businesses thriving and consumers spending. But what happens when the music stops? Interest rates are rising, inflation is soaring. The economic landscape is shifting, the economy is teetering on the brink of recession. Businesses are closing, and the stock market is volatile. This isn't the world Upstart's algorithms were built for. The assumptions they were based on no longer hold true. Can an algorithm predict the future? Can it adapt to rapidly changing economic conditions? Can it understand the complex interplay of economic forces that shape borrower behavior? These are the questions Upstart must answer. Upstart is about to find out. The future of AI in finance hangs in the balance. AI promises objectivity, a world where lending decisions are made by cold, hard data. No more human bias, no more discrimination. But the reality is more complicated. Algorithms are created by humans, and humans are biased. Our biases, conscious or unconscious, find their way into the code. The data itself can be biased, reflecting historical inequalities. Upstart's algorithms are a black box. It's not clear how they work. What factors are they considering? What weight are they giving to different variables? This lack of transparency raises concerns about fairness and accountability. What happens when an algorithm denies a loan? Who is responsible? The developer? The lender? These are questions Upstart and the entire fintech industry need to answer. Section 4. David versus Goliath. Upstart's battle with big banks and tech giants. Upstart might be a disruptor, but they're playing in a crowded field. The giants are circling. The financial technology sector is teeming with competitors, each vying for a piece of the lucrative market. Upstart has made a name for itself, but the challenge is far from over. Big banks are investing heavily in their own AI capabilities. They have the data, they have the resources. These financial behemoths are not sitting idly by. They're leveraging their vast amounts of data and capital to develop cutting-edge AI solutions that could outpace Upstart's innovations. And they're coming for Upstart's lunch. The competition is fierce and the stakes are high. Upstart must constantly stay ahead of the curve to avoid being overshadowed by these giants. Then, there are the tech titans, Apple, Google, Amazon. These companies are not traditionally in the financial sector, but their interest in fintech is growing rapidly. They're all sniffing around the fintech space. They have the technology. With their advanced technological infrastructure, they can easily integrate financial services into their existing ecosystems. They have the customer base, millions of loyal users who trust their platforms and are ready to adopt new services. And they're not afraid to use them. These tech giants are known for their aggressive market strategies and are willing to leverage their customer data to gain an edge in the fintech space. Upstart is a small fish in a big pond. The company is navigating a landscape dominated by much larger and more established players. They need to move fast. They need to innovate. Speed and innovation are crucial for Upstart to maintain its competitive edge. And they need to find a way to differentiate themselves from the competition. Unique value propositions and innovative solutions will be key to standing out. It's a David versus Goliath battle. Upstart is the underdog, facing off against some of the most powerful entities in the financial and tech worlds, and the outcome is far from certain. The future is unpredictable, and only time will tell if Upstart can carve out a lasting place in this highly competitive market. Section 5. The regulators are coming. Will Washington rain on Upstart's parade? Washington is waking up to the risks of AI, and they're starting to ask questions. How are these algorithms being used? Are they fair? Are they transparent? Upstart and other fintech companies are facing increasing scrutiny. New regulations are coming. The Consumer Financial Protection Bureau is sharpening its focus on AI-driven lending. The European Union is already implementing strict rules around AI transparency and accountability. Regulation is a double-edged sword. It can create a more level playing field, but it can also stifle innovation. Upstart needs to find a way to navigate this evolving regulatory landscape. The future of AI and lending may depend on it. Section 6. To bet or not to bet, Upstart's future in a volatile market. So, what's the verdict? Is Upstart a boom or a bust? The answer, as always, is complicated. Upstart has potential, their technology is impressive. They're addressing a real need in the market, but they're facing significant challenges. Rising interest rates, increased competition, regulatory uncertainty. Upstart's stock has been on a roller coaster ride. Soaring highs, followed by gut-wrenching lows. It's a volatile stock for a volatile market. Investors are betting on the future, but the future is uncertain. Upstart is a gamble, a high-risk, high-reward proposition. Only time will tell if it's a gamble that pays off.